The US30 has just stepped into a critical zone. After printing a record high near 53,344, the index pulled back sharply, and traders are now asking one question: bounce or breakdown? This is not just another routine dip. The move from 53,344 down to 52,056 erased momentum fast. Then price stalled into sideways trade, showing uncertainty between buyers and sellers. The bigger uptrend has not been officially broken, but the technical picture has changed. When a strong rally loses support from key averages, caution becomes more important than excitement. At the peak, price formed a bearish engulfing pattern, a classic warning that sellers suddenly overwhelmed buyers. That signal matters because it appeared exactly where optimism was stretched. After that reversal, the index slipped below both the 20-period and 50-period moving averages. For short-term traders, that often means the market has shifted from trending strength to defensive behavior. Now the rebound may look encouraging on the surface, but the risk is that it is only a dead cat bounce, a temporary recovery inside a still weakened technical structure. Momentum indicators are not giving a clean bullish confirmation either. The RSI is recovering, which tells us buyers are trying to regain control, but that alone is not enough. The stochastic oscillator is already moving close to overbought territory. That creates a tension. Price is trying to recover, yet one momentum gauge says the rebound may be running hot. Meanwhile, the MACD remains below its signal line. In plain English, bearish momentum has not disappeared, even if the latest candles are attempting to stabilize above the recent lows. That brings us to the next major level, 52,750. If US30 cannot break above this resistance with conviction, the bounce remains vulnerable to another wave of selling pressure. The confirmation point on the downside sits near 52,425. A fall below that level would suggest sellers are regaining control, and the market could start moving faster towards support. If that breakdown happens, the next area traders will watch is around 52,130, near the lower boundary of the Ichimoku cloud, where support could either appear or fail. Below that, the psychological line is 52,000. Markets often react around round numbers because traders cluster orders there, turning a simple level into a real battleground. A decisive break beneath 52,000 could open the door to a deeper slide toward 51,700. That would turn a normal pullback into a more serious technical correction. But the bearish case is not guaranteed. If US30 pushes above 52,750 and holds there, it would weaken the downside argument and suggest buyers are preparing another bullish leg. So the setup is simple but important. Above 52,150, bulls gain credibility. Below 52,425, sellers gain momentum. Between those levels, the market is still searching for direction. For now, US30 is sitting at a technical crossroads. The next breakout may decide whether this pullback becomes a buying opportunity or the beginning of a deeper correction.